We quickly need to get to the HCL Tech Q2 presser and conversation with my colleague Chandra that the management had. She spoke to CEO Vijay Kumar and CFO Prateek Aggarwal and got their take on the Q2 numbers. Let's listen in.
HCLites have delivered a stellar performance. We delivered 4.5% constant currency growth, which translates to 6.4% in US dollar terms. It's almost a perfect V-shaped recovery. And what's even more impressive is our EBIT percentage is 21.6. This is actually a 22-quarter high, right? 5-year high or 22-quarter high, whatever you want to call it. So that's been good. We signed 15 transformational deals. The momentum in the market for modernization and digital transformation services has been great. Our life sciences and healthcare vertical and the retail CPG vertical grew 8% plus sequentially, which is a very impressive performance. All verticals, all geographies, all service lines, all modes had a sequential growth. So it's a very good all-round performance contributed by, of course, some amount of recovery is due to the dip that we've had in the first quarter, but a lot of transition of deals that were done in the previous quarter got done extremely well, which helped in ramping up revenues. A lot of existing customers continue to demonstrate their faith on us by giving us more projects and some incremental work, which all got billed. And of course, Digital Foundation, which is our erstwhile infrastructure services, is a very, very strong, we're ahead of the pack for a long, long time. And the demand for making a robust digital foundation as a basis for digital transformation is a theme that we see in almost every large enterprise. So of course, all of this, and of course, our employees, last but not the least, they've done an amazing job. They walk the extra mile to keep our clients happy, despite all the odds that they faced. So we're also coming up with the increment cycle. All our employees up to E3 levels will get increments starting October, and E4 and above will get their increments starting 1st of January, which is a three-month lag from the regular cycle. So we are very thankful for everything that's happened. That's what would summarize the quarter, Chandra.
Awesome. So HCL is also giving hikes just like the other companies. That's good news for employees, hikes all around. But Mr. Vijay Kumar, if I just look at the specifics, you mentioned EBIT at a multi-quarter high. You've also hiked the EBIT margin guidance. Now, we've seen EBIT margins, profitability go up also because companies have managed to rein in costs, be it on the promotion, on the hike side, or be it lower SG&A costs. But this is expected to go up in the second half of the year. So are you still confident about your margins? I mean, are you seeing pricing power in some of the newer businesses, the digital businesses? What's driving this confidence?
Yeah, I think the second half also we have projected an overall margin. We've upgraded the guidance. It was 19.5 to 20.5. Now it is 20 to 21% is the full year EBIT guidance. So second half, we will continue to see a good margin performance. Of course, the salary increases that we are giving will create a certain impact and a few other things as we get into the second half of the year. So that's why overall margins in H1 was 21.1, but the full year we are guiding to be 20 to 21%.
Right. And in terms of the growth, I mean, it looks broad-based on the face of it across vertical geographies, but Mode 2 for you seems to have grown faster compared to the businesses that you classify as Mode 1, Mode 3. So are you seeing more acceleration in one particular kind of business? How's it going to shape up going forward, Mr. Vijay Kumar?
Yeah, I think we had a very balanced growth. Mode 1 has got a lot of digital foundation services. That has also grown impressively. Mode 2, of course, has grown almost 7% sequentially and almost 15% plus from a year-on-year perspective. This is all the new technologies including cloud-native solutions, application modernization, analytics, Internet of Things, cybersecurity. All of this are high-demand services. And these services increasing is also good for the margin profile. Apart from the cost controls that are automatically in place, some of the higher value services increasing as a ratio is also good from a margin perspective.
Right. Mr. Prateek Aggarwal, if I can come to you, a lot of focus this quarter on also how IT companies are handling capital allocation. We've seen 2 buybacks come through from TCS and Wipro. Infosys, of course, declared an interim dividend. You've also declared dividend today. But broadly, on the capital allocation policy side, what other plans do you have to return policy to shareholders? Is a buyback on the cards? What plans do you have there?
So, Chandra, you opened the conversation talking about Diwali coming early. So, our board has also decided in line with those thoughts, and they have decided to double the dividend that we have been paying on a per quarter basis. So far, we were paying 2 rupees per share per quarter. And even after the bonus issue, which we announced last October, and we issued those shares in December, we have been paying 2 rupees per share per quarter on double the number of shares. And now in this quarter, the board has doubled the 2 rupees per share per quarter to now 4 rupees per share per quarter. And the important thing is this is not a one-time kind of a thing. It is something that we intend to continue for the quarters going forward. And that is the important thing. It's a doubling, not only for now, but going forward. And that's the good news that our board has shared. Apart from the employees' increments, the shareholders are also getting double the benefit. So that's really the icing on the cake.
Right. And in terms of hikes, Prateek, what levels will this be applicable to? What percentage of employees? What's the quantum going to be? Some specifics that you can give us.
So it is going to be across the employee base, like we have done it always in the past. We stagger it over a couple of quarters, 3 quarters at times. It's basically for the larger population, E3 and below, we will be giving it effective 1st October. And for certain higher ratings amongst them. And the rest of the people, the senior members, as well as the rest of the teams would get it from 1st of January. So it is across the board. And the levels of increases would be similar to what we have done in the last couple of years. It would be around 6% odd for the India population. For the on-site and nearshore, it will be slightly lower.
And in terms of, Mr. Vijay Kumar, in terms of the outlook for the rest of the year, you have maintained that revenue guidance in constant currency for Q3 and Q4. Can we expect HCL to perhaps come again in the middle of Q3 and hike its revenue guidance? How is the deal momentum looking like?
Well, the overall pipeline is also at an all-time high. Our pipeline has increased almost 35% compared to what it was. In fact, our booking has increased 35% compared to what it was in the last quarter. Pipeline has increased almost 20%, and it is an all-time high. However, conversion of these deals and that converting into revenue is normally a 3 to 6 months cycle. So we have done good bookings in the last 2 quarters, and that is the basis of 1.5 to 2.5%. We think we will be, with all the information that we know now, we will be in that range. And this is again a big upgrade compared to, if you see the last time when we announced the guidance, it translated to something like a -2% to